All right, welcome to Coffee with Paul. And this is where I talk about my business, where I run commercial real estate as my day to day job. And I'm going to walk alongside with you and share everything that I'm doing and provide the problem solved, the insights gained, and the deals that I'm working on. I'm going to share that with you. I'm going to do it on a daily basis. And so we start off each one of these by going through some questions in our YouTube channel and Skool class, building strategy in public. So basically, I'm showing you my work. And so by extension, you get to learn some lessons and perhaps apply some of this to your life. And then we'll talk about some of the stats across both social media, the offers that we're making, and some deals. So let's start off with some questions in the community of the YouTube channel. So one of the questions is, the big bill has come out and it has advantages for real estate investors. And what are they? Can you please explain them? So awesome. So the big, beautiful bill has a lot of extensions of what was already good for real estate investors. And so I won't go into the entire bill here because I haven't studied the entire thing and I certainly can't do it off the cuff. However, they definitely extended the opportunity zone exemptions. So now that's a permanent thing. So if you invest in what they call an opportunity zone, and I'll do a separate video on that later on if you want, that you can get some big tax advantages. And if you are a real estate investor and you are buying property, you now get a 100% depreciation, among a whole host of other things that I can go into another video. And basically, as an investor, it did you a lot of good. So this reinforces the concept that the government tends to incentivize you to own assets. The government is not good at owning real estate property and running real estate property typically. The private sector is better suited for that. And this is a scenario where the public sector is incentivizing the private sector with tax advantages, and a lot of them. And so it's a situation where you can only really earn income three ways. And those three ways are with wages, with the property you own or the assets you own, or transfers from the government. So it's a really important distinction I should probably point out here. So basically, there are three ways that you can earn a wage. And I'll talk about them very quickly here. So the three ways to earn a wage: number one is wages, number two is from assets or property, however you want to describe it. And then three is transfers, which is actually subsidies from the government. In any economic system, these are the only three ways that you can earn an income: is wages, your salary or your commissions or your W-9, W-2. Assets are when you own property, something of value. It could be stocks, it could be real estate, it could be cryptocurrency for all I care. Or transfers. And the transfers are the subsidies from the government. This is basically housing vouchers, SS4. This is Social Security, other types of kind of handouts or legitimate transfers from the government. I suspect over our lifetimes that this will grow because of AI. There will be some sort of AI tax that they come up with. Like, this system has not been created yet. We're thinking about as a society how to deal with AI and automation and it reducing jobs. And wages are already stagnating. They have been for a while. They continue to stagnate. The other way is with assets or properties. And so if I'm a betting man, I want to be the person who owns assets. The government, the current administration, has certainly written a bill that has reinforced and made it easier for you to build wealth using assets, and less so with transfers or subsidies. They've cut back on government programs, and they have given incentives to private individuals, the private parties, to own assets. And so the private sector is typically better at owning properties. The public sector, the government, typically isn't very good at managing that, whereas the private sector is much better because they have a profit motive, and so they will typically provide a better product and manage it more tightly. They're more attuned to the market's ups and downs, right? So the government typically is not very good at that. wages have been going down. Assets are being incentivized now to make it even easier to make money. And then I don't want to live a situation where I'm having to rely on the government with subsidies. So if you're a betting person, which one do you want to improve? I would say assets. And so it's kind of the principle behind getting into real estate or any sort of small business is that you want to own assets. And I am not religious about the asset class. There's pros and cons to all the asset classes that I can do another video on. Real estate happens to be one that I like, but there's a lot of other ways to become wealthy or build wealth. And real estate is just one of them. And so whatever principle you take away from this, I would take away from this that our environment has set up us for it is a winner take most environment, and you are rewarded for owning assets. Okay, so let's go to the other question you had was, thanks for the breakdown. You bet. The other one was, what's the name of the websites? And I think what this person's talking about here is on this video, I mentioned how to find off-market deals. And so that's Commercial Deal Finder. And so the answer to that question is here. This is a software that we make available for you to find off-market commercial deals. And so what does it do? It helps you find commercial deals. So it's appropriately named, and that is software that we make available to you, and it's a subscription basis. Okay. All right. Now that was the YouTube questions. So feel free to drop questions in the YouTube stream, and I'll come back and answer those on a daily basis. And now we're going to jump over to Skool. If you're not familiar with Skool, Skool is a platform that you're seeing here on the page that is made to build community. It's where we host our communities, and it's been an absolute joy. So we have a free group that currently has over 3,100 members, and then we have a paid group that currently has a little shy of 300 members. And so I'm going to go through here and answer a couple of questions that came through. So syndication, it just came in. When you decide to take down your own deal instead of wholesaling it, you may need to syndicate to get the funds. Okay. Not really a question, just a comment. So yes, in case you're not aware, if you're going to go raise money, one of the appropriate ways to do it is doing a syndication. You typically need an SEC lawyer to help you set up those documents. And this is typically if you're going to buy your own property, you need to raise some capital, you need to pool assets from several investors. That's when you would do a syndication. Okay, so Ardan asks about proof of funds. And so proof of funds is when you get on the call, you're like, I want to make an offer, and here's my written offer to buy this multifamily property or whatever. And they'll say, that's great. Send that over along with your proof of funds. And what the broker or agent is trying to do is they're trying to protect their seller from being tying up the property with somebody who is not capable of buying the property. And so it's a bit of a test to see if you're legit. And he's asking, how do you approach this conversation? And here's our advice for proof of funds. We tell people straight up, unless you're sitting on $1 million, $2 million of liquid capital, which most people aren't, including me, because my money is deployed. What I do is I tell them the money is not coming from me. I work with a network of investors, private funds, syndications, hedge funds, high net worth individuals, family offices that are looking to deploy their capital, and we have access to practically unlimited capital for the right kind of deal. We can absolutely provide a proof of funds when the time is right. The time is not right now because I'm not even sure if I know who's going to be the investor in this. I'm not even sure if I want to buy this property because I don't know anything about it. And so that's typically what I do is I'm kicking the can down the road and say, yes, I will provide you proof of funds, but I'm not going to do it right now. And I would say 9 times out of 10, that buys you some time until you get the property under contract, which at times they will go ahead and push you to get the proof of funds, which then you can go and get from a third-party lender or a third-party private money person that you're working with, whatever, or the end buyer even. And so there's also a service here that Vera pointed out called the Best Transaction Funding, which I haven't used before, but it's super. I've used similar services. And so they're a transaction funding company. I'm not associated with them. I don't know who these people are, but they do offer a proof of funds letter that you can just download right here. And they even walk you through how it works. So take this with a grain of salt. I have not confirmed this, but I have used similar services where they're a transaction funding company and they will provide, you will submit a form and they will provide a proof of funds for your property. And then later on, when you're closer to closing and they've actually done their due diligence on the property, then they will actually give you a verified deposit, which is super helpful. So you have proof of funds. And so they will also provide a VOD, and the VOD is verification of deposit. And so this is when you're further into the transaction, whereas the free proof of funds is just like, hey, we have capital and we have the capacity to purchase this property. They're not saying that they will fund it. Which is why I think a proof of funds is so silly, because you can get this from a lot of places pretty freely, and it just says we have access to enough funds to buy the property. It doesn't mean that you're going to actually use those funds to do it. So it's kind of a silly request, but it's kind of all the seller and the broker can do to try and prove that you are capable of buying the property. Okay, so let's say we like that one. And we have answered this question a lot in our community. So another question here is from Harvey, and he says due diligence days. Basically, he says one of our brokers that I'm working with came back to me with an LOI. He's asking for a reduction of due diligence. He would be okay with 60 days. And basically what he's asking here is this doable? Is 60 days enough? And that 40 to 60 days is pretty typical. And so what we did is we asked for 80. What we typically do is we ask for 80. Like, no, that's too long. We want 60. And so what we did is we got the 60 that we wanted. Whereas a lot of times if you say, I want 60 days, they may have asked for 45. So it's a little bit of a negotiation tactic to get as long of a due diligence period as possible, because we want time to raise money, find our capital partners, and to actually be able to put the deal together to close on the transaction. Excellent. And so it looks like Brad just got a property under contract and he's sharing it with the group. Okay, let's go to the free group, see if there's any fresh questions out here that I haven't answered already. So we have folks that are looking to collaborate. It's great. We have a couple of lenders in here that will help you fund deals, but no pressing questions. So what I'll do then is I'll jump over here and talk about some of the actual deals that I've been working on. So lately I have an RV park under contract and we're raising capital to take that down. And that's in the greater San Antonio area of Texas. That's under contract. We like to buy properties with owner financing. This seller just would not accept owner financing terms, but we were able to make an offer to him that was a good cash out offer. So we'll have to raise capital to buy this property. And we're also working on an 8-unit in Louisiana, the New Orleans area. It's the LOI is signed, and we're now negotiating the details of the PSA. And we're working on 2 different LOIs for retail properties. That's actually one that Brad just dropped in. That looks like I may have an update that one of the LOIs was turned into a PSA. It's great. And when I say PSA, and in fact, what I'll do is I'll just go through this. So here's the process. You get leads, right? You talk to them, and then you make offers, and then you get an LOI signed. And then once an LOI is signed, you get what you call a PSA. So, and you may even consider this LOI offer kind of the same thing here. So a written LOI is a letter of intent. And so we have a software tool that you can plug your numbers in and it will spit out a LOI for you. and in the format that we like, and it gives you 3 different offers. And we typically do 1 cash offer where it's a kind of a low cash out offer, and then 2 owner financing offers. And then an LOI is a non-binding written agreement. Okay. That means this is how I intend to buy the property. If they sign it, nothing is really officially in place yet, other than they have agreed to your terms. And so when they try and renegotiate on the PSA, well, the purchase and sale agreement, what we say is, well, you've already agreed to this letter of intent. This is what we thought we're being honest. We're following what we said in the LOI. We expect you to do the same thing. Because sometimes what people do is they get an LOI signed, and then once they start negotiating the PSA, they start changing their mind. They have time, and they're like, well, I'm not sure I like that anymore. And the reason we do an LOI first over the PSA is LOI is basically 2-page Word document or PDF, and it doesn't take just tons of time to create. Whereas a purchase and sale agreement on commercial properties tends to be, gosh, I don't know, 20 pages sometimes. It's a lot. There's a lot of little nitpicky details, and depending on what state you're in, it's in a different format. And so we like to use letters of intent because we're making offers. We can use our paper and we can send it to them in the format we like. And then once we agree on the big major issues and the major issues of the negotiation points, then we can move over to the purchase and sale agreement. And that's why on these we have 2 letters of intent that are out, and they're signed, and we're kind of working through the details. What this also does is it gives us a little bit of time. It adds to our due diligence period. So once they have a property under like a LOI signed, that's when I start doing kind of soft offers out to our capital partners to see if they want to be a part of that deal. So it gives me a couple of more weeks, sometimes maybe a week extra time of vetting out the deal and seeing if capital partners want to be involved. Okay, so I had to bail on a property in Virginia. It was a storage unit, and they said initially that they were flexible and that they wanted to actually buy, that they wanted seller financing. But then as soon as I gave them an offer, they basically came back and were way too extreme. And we know that they've done this with 3 different people. So it turns out 3 different people in our community have talked to the same person, and they've done the same thing to all 3 people. And so basically, I'm cutting my losses and just moving on. I didn't lose any money, but I definitely spent a lot of time on that, and it was a deal that I would have liked to have purchased, but the seller just was not flexible and kept pushing back on us. And so also a little bit of an update on my portfolio. So I'm consolidating my portfolio in Arkansas, where I'm from, and I have a decent size single family portfolio, and I'm starting to sell my single family properties off one by one as tenants roll out. Instead of getting it fixed up and getting new tenants, I put that property in the market and see if it can sell. And if it sells for a price that I like, then I'll just sell it off, because it's one less property for me to manage as I'm building a larger multifamily and commercial portfolio. Managing 20, 30, 40 single family properties is kind of a hassle. And so I actually have one of those properties under contract and is scheduled to close next week. So negotiating with a buyer on a single family that needs a new roof. And so here's an interesting development that just came up on this property. So I'm negotiating on the property, and here's the situation. The property recently had some roof damage. And so I'm waiting for roofers to get out to it to work on it. From the roof being damaged, I have the money from the insurance. And so I have the budget to fix the roof. But this seller is out of state and is an investor and is going to flip it or rehab it anyway. And so basically I have this property for sale, and they pretty much gave me the offer that I wanted. And so we're now negotiating whether or not I do the roof or they do the roof. And so if I do the roof, then I'll sell at the higher price. If they do the roof, I'll sell it at the lower price. And so we're going back and forth, and that's very typical when you're in the midst of running a business and trying to sell transactions, whether the transaction is kind of a modest $100,000 or less, or a $2 million, $5 million property, you have these same negotiations. So this is why I have decided to spend more of my time and energy on these bigger transactions, because I spend as much time thinking about this $100,000 transaction with one roof than I would if it were a $1 million 12-unit apartment complex or something. All right, so that is my daily update and answers questions answered in the community. And so what you can do is you can find the links in the chat below, or you can find the links in the description below, and come join us in the Skool group. You can make a comment in any of our Skool comment threads, or you can go to the YouTube channel that's shown here and you can just ask some questions. And each day I will be doing a daily update and trying to answer your questions.